Hi, everyone. Welcome to another episode of Trading Bitcoin with your host, Vays. Second show of the day. I could not pass on the opportunity after being able to get in touch with Willy Woo, who was able to join us. Unlike myself, that is in a part of the world where we're now in the middle of the night, we are with Willy, who still has some daylight. Willy, thanks for joining us. And we're also on with David Poole of Adaptive Capital, who joins us as well. He's been on the show before. This is going to be a good one. Willy, looks like you're in a car somewhere.
Yeah. I'm bum living out of my vehicle in New Zealand. It's kind of obligatory to be do a road trip in New Zealand when you're in New Zealand. So I'm just kind of going from top to bottom of the country, catching up old friends. I haven't been in New Zealand in the last 4 years. I think I've been in New Zealand 2 months, it's kind of my home country. So just want to reconnect with old friends, and best way to do it is out of an RV. So I'm in my RV right now.
Awesome. I'm actually going to be in New Zealand like Monday or something. So maybe we'll run into each other over there.
I'm really tempted to fly up, I'm really tempted to fly up to see you guys.
Yeah, I don't think I told my audience where I'm going to be, but don't worry, they'll find out. And David, how are you, man? Still muted though. There you go.
All good, Tom. Thanks for the invite again.
Awesome. Yeah, I haven't seen you in a little while, but yeah, I'll probably be back in Mexico this year at some point. Maybe we'll meet up over there. And I'm hoping to see both of you guys at Unconfiscatable. I know Willy's coming. Hoping you will as well.
Yeah. I'm still figuring that out, but I'll make my best effort to be with you guys this year. I wasn't able to go last year, so I'm really trying.
Awesome. All right. Without further ado, I can show my charts, but I already did that earlier today. Willy, you wanna kick us off? Tell us what's going on. What are you thinking? Without further ado, I can show my charts.
Yo, can you guys hear me?
Yeah. You ready with your screen share, or should I?
Yeah. I'm just Let me just do that right now. Screen share.
Hey guys, I'm gonna keep an eye on the questions, though I really do want to pay attention to what Willy has to say. So if you want to throw some questions out there, I'll keep an eye on those.
Let me know when that's up on screen, and I'll just
walk this
through. Okay. I mean, you probably already covered this in your trading show earlier, but like most of us in the fund have been up all day and night in the last 36 hours. We've been trading this kind of Wickofian accumulation scenario. So I think a lot of people were bearish, whereas we saw exhaustion of the sell down, and it was following this pattern. This is from Nick, who's one of our newest newest analysts in the fund, and this actually goes way back when we started trading on it, but it's just been trading on it to a T. And but if you want to look at where we are in the macro structure of it, I'm just going to throw just a ton of different charts, which is, I'm meaning to tweet this out. It's kind of like the state of the network in terms of investor flow. So what we're seeing here is this is kind of an oscillator. It's an undisclosed oscillator that we use within the fund. It's an on-chain one. It's picking up the movements of investor activity. And typically, there's 3 pushes in a bull market coming off the bear. The first push is the move upwards, which is where it reverses us from a bear trend to a whole lot of investor activity coming in that turns it around. So it turns it from, it may still be bearish. Like, see, I'm talking number 1 here. It's still bearish, but the investor flow is coming up, and it's stemming the momentum that's driving the price down. The second phase is really the accumulation push. And then the third phase is really the push that usually after a correction, you sort of pop out of the accumulation band, and then we have a sort of a correction downwards, and then there's a second push of more investor activity, and that sets us up for the sort of the fat meat in the middle of the bull market. So if you were to look at this first phase of the full bull market is a sort of pop out of the sort of sideways. The second phase is this nice low volatility band within the bull market, and the last phase is this sort of very volatile, relatively unstable, very high climbing mania phase. And so what we're seeing right now on chain is that we're getting another push, the third push. It's unusual from all the other prior times where we've generally, when the third push is happening, we've already had like a sort of a upward trend. And what we're seeing here is that we're going downwards. The downwards has been caused by two factors. One was that this was a cascade of short squeezes, very much exchange driven. So it was overshot what fundamental investors would have priced it at. And then secondly, we've had the plus token, something like $3 billion of scam money being sold onto the market. 200,000 Bitcoins was in their wallet, 150,000 have been sold. It started around here on the chart and it started slowing down here. And we haven't seen any more plus token BTC being sold out of those wallets since this time. And that's been the time we've flattened out.
Actually, the latest update on the plus token selling, they pretty much closed the new, they closed the scam right at the top, basically, which was late June.
Right there.
And right after they started selling on an average of over 1,000 Bitcoin per day. So that with the minor selling pressure, it became, just too much distribution for the market to handle. The latest update from the best analyst concerning plus token scam, who's Ergo BTC on Twitter, he updated us today and he told us that those out of the 40K Bitcoin that were left since the China dump at 9K to the 6K area, we've seen a diminishment in distribution coming from those addresses to about, at most, 500 Bitcoin per any given day or so. Our best guess for that is that they diminish distribution because of the low prices and the low liquidity from the holidays, right? Especially in the West. So that's pretty much the latest on the plus token debacle.
Yeah, the like, to put in perspective, we're mining 12.5 Bitcoins per block right now.
Hey, Willy, can you speak up a little bit? You're coming in kind of low.
Okay, so we're mining 12.5 BTC per 10-minute block right now. At the height, which was really when it started up at this 14,000 phase, they were selling 7 additional Bitcoins every 10 minutes. And then that slowed down to that 500 per day, which is equivalent to about 3.5 Bitcoins per block. But I think that's even slowed down to, I don't think we've seen anything in weeks so far. But I'll take you on to some other stuff.
Hey, Willy, don't leave that chart yet. Wait. Go back. All
right, zoom back, come back. Yes.
All right, yeah, on this one. I gotta say, look, I don't see it. Like I'm staring at this chart. I don't see the connection. I don't see the consistency. Your like phase one is coming in like with different, I just don't see it. Like I don't see the connection between the indicator and the price charts. It's like just happening almost randomly for me. Like
How's
sometimes phase one is happening when price is rising. Sometimes it's happening when price is falling. I just don't see it's
Phase one always
that,
happens when the price is falling, whilst the investor activity is increasing.
Well, wait a minute, no. But back up here. In 2011, it's happening when price is rising.
I think it happened. It was very close, but I think it happened very much tight, right at the bottom.
Right, but in the other two cases, it's happening while the market is still a bear. Like I
now remember in 2011 it was super well dominated, right? So you're going to get this very discrete reaction. This is, I mean, this is a fundamental. This is the behavior of real investors. And when everyone's selling off here, all it took was one whale. And if you were to look on the blockchain, this spiked to some obscene amount. There was more Bitcoins traded in this heightened point in the history of the 10 years of Bitcoin trading. And probably one whale shifted that. Whereas here now we've got a bigger ecosystem, and it started to come in much more like dust transactions. And so that to me is really logical, that it just shot up and it was very discreet there, because it was probably just one person that decided to buy up a huge amount of the coins. You can, if anyone looks at oh gee, let's have a look. Let's go to Webull charts, which is here, and momentum. Maybe.
And then I have one more question about that chart after you're done.
Yeah. Okay. So yeah, I've done a lot of smoothing here, but if you were to look at the sheer number of coins that was transacted in here, it was off the charts. I've got on some other charts. I don't know where I put it, but yeah. Anyway, next question.
So you're looking at phase 3 right now. I'm going to call them phases. The third reaccumulation right now. So you are anticipating this accumulation to give you a higher peak than in 2019, correct?
No, I'm just looking at trends that I'm like going, okay, there's investors entering, they're interested, they're interested there, and they're interested there. I'm not looking at the heights of it. I'm just looking at the where they're coming in, where they're no longer interested. So these guys came in on the capitulation, these guys came in at the accumulation, and these guys came in at the reaccumulation. And then these guys, like, momentumed up to the peak, and you'll see the volume dropped off. It always drops off before the peak, and it starts to slide. It leads what happens at price at this phase, right? And then we just go down and down and down until we get the first interest again, because it's too pricey at this point.
Okay, so the height of that, the height of the indicator is not that relevant.
The height of the indicator is bullish to bearish as the regions. The trend is more important, because some of the mechanics of what's behind this is that you know, more and more of the coins are taken off the blockchain, are being held and hodled and custodial providers and on exchanges. So the height of it will vary over time, and you can see already the height's getting smaller, because the signal is much less than it used to be back in these early times where everything was on chain. Here we're in the regime of a lot more exchanges, and now we've got exchanges and the Zappos and point-based custodies of this world. So the signal is dropping. So I wouldn't look at the absolute values. I'm looking at the fractal and the trends.
Okay, I'm good. Go on.
Okay, cool. All right, so On-chain OBV, for those that aren't familiar, on-chain OBV is on-balance volume. On-balance volumes measures kind of when the price goes up, we also multiply that with the volume. When price goes down, we multiply that volume. So obviously, if an up move takes a lot more volume than a down move, then you're seeing that a lot more buying is happening. So it's a good way of detecting accumulation or distribution that's not evident in the price chart. So one of the things you might notice is that every bear market we've had is the price drops, OBV drops, because people are selling. When we say people, it's actually the smart investors, the ones that are usually right, because every trade is matched. So, you know, someone's selling, someone else is buying. But what we're following is the smart guys, the ones that generate the most volume. So again, this is the bear market of 2014. Bear market 2018 was flat. So we didn't actually have a lot of distribution. There was a lot of people buying, smart people buying whilst it was dumping. And that led to this very compressed accumulation band because they'd already accumulated a lot at this point, and as opposed to this stretched out accumulation band in this zone. And then we pumped up in this rise, and then we actually saw what looks like a bear market sell-off. A lot of this is plus token, but the thing to be of interest right now is we're really starting to see a trend reversal there where we're starting to see hidden accumulation come in again. So that's another clue.
Wow, that you really zoomed in on that one.
Yeah, I mean, it might hit that and come back down. This is probably yesterday. I think we'll start to see, I'm not seeing organic investors being woken up from the last 24 hours of price action, but I really do believe it's coming. I'll take you to Renato's spent output price ratio. And so SOPR, for those that don't know, is essentially looking at the blockchain to see essentially the trade position of the latest movements of the of coins on the blockchain. So it looks at the UXTO set, and it can tell you based on looking at the price when the transaction took place whether that person the market in aggregate is in profit or loss. So this is kind of a 90-day moving average. So, you know, in bull phases, it's saying this is the amount of profit in terms of a ratio, kind of a percentage of when they entered, entering being the point in which the coins shifted. So what I've drawn here is vertical lines at the trend reversal where at peak losses, and I'm only drawing them inside, well, that's not true, but I'm showing you some significant ones, right? This is the bottom. This is the reaccumulation bottom. This was the bottom. This was sort of a bear market rally, and I just showed it because it was in negative. I'm only showing the ones where we had a trend reversal where people were loss making. So we had a few there in 2018, but right now we've just bottomed again. And so that's significant based on just a backtrace of history where when we start to see a bottoming of coins that have been invested in and they're underwater and it's moving back up, that tends to be significant in the macro timeline.
So wait a minute. But see, I'm not ready. I'm not convinced yet. Like, to me, I'm still anticipating this current line to be more like the 2018 lines that you have drawn in there.
Right. Yeah. No, that can happen. That can happen for sure. Mind you, that's going even higher as of, this is like yesterday. As of today, we had we've just had a very large move. So it's going to go higher. I want to see that trend line being broken to say, yeah, we did bottom. But if you were to look at a bottoming in the market and now we're in a bull phase, sometimes it dips. And that second dip is also a signature of reaccumulation. So that was the bottom there. And then
let me ask you one more question. The 2014 line had a nice rise in the indicator while the price was still going down. How do you explain that?
That trend reversal shows that the price was moving upwards, right? That's all. But like, if I was to say ungroup this and remove all lines that were not part of the bottom of the market, so now this is what we're at.
No, but like that specific one, right? I'm very curious about that one. That seems to be the only.
This is a mid bear market rally, right? Which is the equivalent of this point here.
No, but it's not really, right? Because the indicator is going up for like multiple months, but the price only went up for like a week. It really diverges, unlike anywhere else in the chart. So I'm just curious what causes that. Like, what do you think causes that?
This, are you talking about it carries on upwards?
Yeah.
That's all it's saying is that people that like the entire market, no matter what time they bought their coins, they're making profit. At this point, their coins are less in profit. Now they're in loss and so forth. Okay. So that's all what the line says. But what I'm interested in is when does it reverse? But what I'm really wanting to be interested in is like this kind of idea of an accumulation and reaccumulation. I'm interested in the point in which it reverses, which is the bottom, and the bottom. And I'm interested in where we pop out of accumulation and then it comes back down because it was overheated, and then we bottom a second time. And that usually is the setup for the next phase upwards. And so in this year, on this prior cycle, we bottomed there and we never actually came back down. So there's no clear reaccumulation there. Maybe it was here, but it's not clear. But as I've been saying for a year now, that this cycle we're in now is more akin to 2012. You'll see it again. People got into a loss situation here, and it looks like it's bottomed again. It's very reminiscent of that. And this, to me, is the reaccumulation happening again.
Another important thing to point out on that indicator, the SOPR, that chart specifically, the one that Willy has on the screen right now, it's a moving average of the raw data produced by the indicator. I don't know if it's a 30 or 90-day moving average. I don't recall. 90-day moving average. So the thing about that indicator is pretty much it's a ratio, on-chain ratio based on the price where the output was both purchased and sold. So in bull markets, the principle of the indicator is in bull markets, whenever you have the indicator oscillates back to 1, that gives you a bottom. And in bear markets, the oscillator gives you a top. And it back tests quite well. Now, since the distribution phase at 10K and all that, it has come back to a sort of bear market territory. So it has been giving tops when it goes back to 1 and so on. We're noticing that there's been what the indicators does whenever it's shifting between bull and bear trends is it starts to consolidate a lot around the number 1 area. So whenever you have that shift, it's full confirmation that you're in a bull market again. We got this right as we were breaking out of 4K back almost a year ago, to give you an example. And we got back down of the oscillator when we were breaking 9K into 8K back in 3-4 months ago. So, and this representation is it's an iteration, derivation of the raw data, which applies 7 to 90, maybe even 200-day moving averages to get more definitive signals that you get a top or a bottom, or that you're in a bull or bear market. Obviously, since it's a 90-day moving average, you have a 90-day lag on it, right? That being said, I would also add that beyond the some of the on-chain stuff that we're seeing, I mean, days destroyed has been very low all throughout distribution, which means that a lot of holders are actually doing their job. Dormancy has also kept going to very low historical levels. Dormancy is the ratio between destruction, days destroyed, and transaction volume. And it gives you a sense, a very proportional sense of when are holders actually dropping a lot of the Bitcoin in circulation. We didn't see that much, even despite the over 50% retracement. So that leaves us with Plus Token being the main outlier in this drawback. I think Plus Token is pretty much the primary factor in causing the whole market structure of 2019, both on the way up and down. On the way up, it created a lot of FOMO out of Asia. It restricted supply significantly, and it collaborated or helped the Westerns, especially Western traders on BitMEX, to short squeeze themselves.
If you were to look at the OBV and you see how this tiered phase where we slice through this crazy resistance band through a series of short squeezes, that drew in a lot of investors. You can see that with this up move, and you wouldn't have expected a retrace down to the 6,000 on that alone, because we brought in a lot of new money coming in here. And so when and so what you would have expected would be a blow off top, and I talked about this a while back, but I wouldn't have expected to retrace down to this level. But what you see here is a lot of dumping coming from Plus Token, bringing it back down to the mid 6,000s. So the Plus Token has been quite a big influence on this retrace, to the point where people think that this whole thing is a bear market, which is, in my view, not the case. The bull market started here. We've got a Ponzi scheme selling shit down here. We've got a blow off top happening at the same time from a series of short squeezes, and two forces combined brought us to 6,000. But in my view, the bottom's in. I've been saying, not publicly, but privately, the bottom's in for about a month now.
Well, wait a minute. What are you already talking about? The next bottom, or did you still talking about the 3,000?
I'm talking about this is the bottom. This is the bottom. Right. I know there's a lot of talk saying we're going to 5,000, and I'm seeing that trading in the last 36 hours because of the amount of disbelief I'm seeing in the funding rates, where every time it moves, they want to short more because they're expecting this to come back down, and they're thinking they're getting a very good entry into a higher level to short from, where I'm saying this is the bottom and we're not going to 5,000 from all of this market structure stuff, and I'll go to the next chart, which is very similar to spent output price ratio.
Well, I got one last comment on your prior chart, and I want to throw in my 2 cents on 2019. No, not this one, the one before.
This one, yep.
Yeah. To me, the current, potential turn in the indicator, to me, it still reminds me a little bit of that 2014 turn. Like, I'm not ready. Nope, the other one, that one. Yeah. I'm not saying that the price is going to go lower than 3,000. The $3,000 bottom is most likely in. I know it seems obvious at this point, but I'm saying that anyway. I'm still not convinced we're not going below 6,000. I'm still favoring below 6,000. And my view of 2019, I know you guys are putting 80 to 90% emphasis on plus token causing the pump and then causing the dump. I put a lot more emphasis on the rise in 2019 having to do with rotation out of the top 10 to 20 shitcoins into Bitcoin, making Bitcoin dominance go from 50 to 70 as a bigger driver in the rise of Bitcoin going up than the plus token scam. And when that rotation ended, the moment Bitcoin flattened out at 70% dominance, that's when the price of Bitcoin started to drop along with the shitcoins, because there's at this point, if you haven't sold your Ethereum, you're holding it till the end. If you haven't sold your Litecoin, at this point, it's almost too late. You're going to hold it till the end. And I don't see mass adoption coming. I don't see new users coming into Bitcoin. And right now, you're almost dependent on money currently in the Bitcoin space to continue putting new money in and buying up tokens. Maybe that's enough. Maybe that's enough to drive Bitcoin to new all-time highs, but I am still a little skeptical.
You know, what you saying this reminds me of the plus token started. Plus token started here, and it might have been the response, the entity responsible for this not driving downwards in a bear market being flat, because everyone was buying Bitcoin in a Ponzi scheme here, and then they sold here as the scam got dumped onto the market. And so yeah, just the thought anyway that
I think most of the alts got rotated all out in 2018, if not before the break of the triangle.
No, man, so much meat got sucked out of alts.
Yeah, exactly.
All of 2018, all of 2019.
No, but I don't think they rotated out in 2018. In 2018, Bitcoin was falling too. Like there wasn't. Yeah,
but dominance kept rising
faster.
Dominance kept rising.
Dominance was
no way, not in 2018.
No, in 2018.
2018 it did. Yeah, it did.
In the first phase of it, and then it got crushed.
Right. No, dominance went from about 35 up to 50 in 2018, but that was mostly because the shitty shitcoins, like outside of the top 20 shitcoins, took a real hit. There was never any time to rotate those into Bitcoin. They just crashed real hard. And the other, because Bitcoin was falling as well, everything was in a bear market in 2018. And I don't think there was a big rotation out of shitcoins into Bitcoin. The rise in Bitcoin dominance in 2018 was mostly...
The first quarter of 2018, I think there was just this fervent momentum from ICO raisers. So there's still a lot of money being raised and pumped into the shitcoin market. So while Bitcoin had already turned down at, I think, December the 20th, it was in 2017, it was already on its way down. The momentum of that shitcoin bubble, and that was an incredible shitcoin bubble, Like Bitcoin did 100x. What did shitcoins do? They did, I think, a factor of 10 higher, 1,000x. And so when you get that kind of momentum coming off this hot rocket, it takes a little bit more time because people were still, buying these ICO raises. And I think that's what kept, it lagged Bitcoin. While the market, Bitcoin already said, we're going down here, while everyone was still frothing to make more bubble money. And so you'll see that in the charts in 2018.
Well, yeah, Willy,
and then it gets killed in the second half.
There is
they retrace 99% most shitcoins, whereas Bitcoin retraced 85% or something.
To me, there is a somewhat clear correlation. Like Bitcoin dominance hit its low in January of 2018, literally at the peak of the market. Bitcoin dominance hit its lowest peak, and it flattened out in September of 2018, and then it started a new leg up at the end of March. just as that pump happened.
It's right there, right?
Right.
So at this point, shitcoins are getting massacred as Bitcoin rises back up. And there was really first quarter, the first quarter held. It held because of that momentum, but the second quarter onwards, Bitcoin came back.
Yeah, but Willie, what I'm saying is the entire 2018, the reason for Bitcoin's dominance increase is not because people are rotating their shitcoins into Bitcoin. It's just that there is less people buying their shitcoins, there's less demand, and it's falling faster. Because if people were actually rotating out of the shitcoins into Bitcoin
they're selling.
in 2018, Bitcoin would not have been falling.
Without a shadow of a doubt, all my shitcoin friends are selling. They've been selling consistently to the point where I have friends that have hired people to trade them out of the positions because they hold like hundreds of shitcoins. They're selling.
Right.
Yeah, they're selling to USD mostly, not to BTC or a stable
I think
coin
a
or
mix
whatever.
of both. I think it's a mix of both. Actually, I think BTC in 2019.
Right, but I know, but in any case, the selling of those shitcoins, even if some of them are selling it for Bitcoin, the demand for Bitcoin from the selling of shitcoins was not enough to drive Bitcoin higher. Bitcoin was falling all throughout 2018, except in some stretches in
in 2018 it was sold to USD. In 2019 it was sold to Bitcoin.
Exactly.
And everyone was thinking,
look at, if you glance at that last peak, like if you go to April of 2019.
Around here?
No, 19.
19. Oh, yeah, sorry. Yeah.
Okay. Right into April.
Yeah.
Like late March, right there, that bottom, right?
Yeah.
Right there, that's when Bitcoin popped to 4,000 and took off to 14. And if you go to the peak, that's exactly when Bitcoin topped. And to me, and that's where the top 10 altcoins took a severe hit. This is where the main rotation out of altcoins, out of the top 10, out of the top 20, altcoins with value. This is where Ethereum is going from like 300 down to 150. I think that was a bigger driver of Bitcoin going 4x, the rotation out of the top 10 altcoins while you still can. And that has stopped since the peak in Bitcoin. So I think this is also a major driver. It's not just one plus scam.
Yeah, some money is coming out of altcoins and it's coming into Bitcoin.
You can also check
it's arguable how much money that is.
You can also look at the trading pairs in most exchanges, the BTC pairs. Most of them, including Ethereum and Litecoin and all the typical ones, were completely dry throughout 2019. In fact, that was one of the main drivers, one of the main indicators where you could track, this thing is going nowhere, because most speculators who, had a big causality in driving the market up in 2019, shifted from using altcoins as a leverage play on Bitcoin to just leveraging Bitcoin on BitMEX.
Yeah,
if you actually look at the divergence between the volumes in all BTC pairs dried up completely, right? So if people were actually dumping their shitcoins into Bitcoin, that would have showed up in volume. My estimation is that most of that got dumped in 2018, especially late 2018 in November and December. And then most speculators started to focus mostly on Bitcoin and BitMEX, and drive a lot of parabolic rise into the 14K by just short squeezing the market all through, like broke 6K, broke every resistance, right? Except the quarterly one at 14K. But the thing is, I do believe that a lot of that has been seen on the Chinese related exchanges, Huobi, Binance, OKX, and all that. you can actually see the premiums rise, the demand in spot exchanges coming through China to rise respective to the West, and spot exchanges like Coinbase on the West leading on spot when compared to derivative perp premiums, perp contracts. I mean, derivative, BitMEX, etc. So what a lot of people considered a short squeeze, which was the case whenever open interest and open value was extremely high, right? You can actually see it as China leading the whole market on spot. So the price indexes all throughout exchanges on spot always led the movement up, which meant that there were actual bids coming in exchanges and actual accumulation, and people just buying in exchanges and driving the price up. I think the main cause out of this is China and Asia, because you can actually track it in the historical premiums coming from the bottom. You can always see that spot in China led spot in the West, and the spot in the West led derivative contracts like BitMEX.
This is an interesting thing we've been finding out, is that like China is smarter than the West in trading. Every single dip, you'll see China buying.
Yeah.
We use that in the fund. We just look at where China's buying, and that's a very bullish signal.
So far, especially for 2019, because they actually led the market. You can actually track a lot of, especially coming from hedge funds, a lot of buy interest at the beginning of 2019 coming from the West. But most of the parabolic rise, once 4K broke into 14K, a lot of that was China. And China is, resuming a lot of accumulation as of now. That's one of the reasons we're
look at this chart. I'm like going, there's probably a little bit more. Like if you look at this trend of where Bitcoin dominance is from here to here, we're still a bit below. We're normally in this band up here, right? There was this whole chunk taken out of the Bitcoin's dominance because of Ethereum's ability to help everyone raise money on nothing but a white paper. And so like where we should be is probably up around the 80% dominance. And I feel like altcoins are still overvalued, but not saying that alts are going down. I'm just saying that because I kind of feel like they've been sold down so hard that they might pump a little bit more, but somewhere around the 80% is the sweet spot right now in dominance. And we were talking a little bit about the money involved. Tom Lee talks about from Fundstrat, he talks about every $1 billion that you put into Bitcoin, it's like a $20 billion that increases in market cap. I can tell you without a shadow of a doubt that ratio is higher than shitcoins, because the amount of tokenized engineering that these guys do with locking up coins and whatnot, it takes very little amount of new money to pump it higher, which is, it's in the design of a lot of these coins. Like EOS would be like, I'm going to design my token in which that if I'm going to use the network, I have certain amount of transactions that I can get access to. Anymore, you've got to hold and lock up EOS to be able to get more access to that bandwidth. And so that's a network that's encouraging more and more buying and locking up of the coins. And when you do that, it takes very little capital to move the price upwards, because all of it's taken off the supply side. And so, shitcoins have had this history of, Dash is probably the classic. So since 2014, engineering these tokenomics to whatever billion you put in, you get not 20 billion like Bitcoin, but you get 40 or 60 or 100 billion, depending on how outrageous their tokenomics are. So I don't think there's a lot of money coming in from altcoins, because, there wasn't a lot in there to start with. They were just overinflated market caps. Ethereum's pretty liquid, Ethereum itself, but some of the sheer shit coins, they're they're just super locked up. Like you're looking at 60% to even higher of the token supply just taken off the market. I mean, Ripple's classic, right? Does anyone know how much does Ripple Labs own of the supply? It used to be 90%.
It's like 60%.
Yeah, it's like they've already got 60% lockup, which is the standard. It's kind of like the gold standard of what you want to do if you want to design a shitcoin, right? They've already got that out of the box. And so anyway, that's why you see these crazy volatilities and the ease of which that you can manipulate that market.
You can check it actually, Willie. If you just go to, if you just hit the back button, if you just go to the market cap.
Yeah.
Also, isn't Jed McCaleb's sell limit increased?
I think
this year.
Oh, yeah. So there you go. Circulating.
There supply. You go. Whoa, there you go.
Total supply. Yeah, there you go.
This is one company that's gone to a good thing. The entire business model is involved in selling their tokens. They make no money other than making partnerships with banking, because if you're on the board of a bank and the shareholders and the investors want to know, what are you doing with this blockchain stuff? And it's like, oh, we've got a partnership with Ripple. It's this cutting edge blockchain thing. And then Ripple going, yeah, we'll partner with you. And they clock up these partnerships, right? To pump the freaking market. And then their business model, they report it themselves. All their money comes from is to sell into that buying further. They buying further.
No, the whole business model is to just sell XRP.
To me,
out of that circulating supply, I bet you they own more than half of that, because
undoubtedly. Yeah. That is it. This is like inside there. Yeah,
well, inside the circulating supply, I bet you the insiders of Ripple own more than half of that. Like, I can't.
Of course, because you need that amount of Ripple to be able to manipulate your own market. Right. Which is, someone else has done a study which show that they came to the conclusion that Ripple is one of the most manipulated markets out of the big caps. It's not organic.
Well, it's obvious. It's obvious. I mean, the XRP army is like thousands of people strong. I've been to probably more conferences than anyone in the last 2 years. I've never seen a single Ripple fan in person. I've never seen a hat. I've never seen a t-shirt. I've never seen anyone other than a Ripple employee occasionally at a conference. But on Twitter, there's thousands of them.
Yeah. I mean, it's, this says to me that if the scam's big enough, you get away with it, you get enough VCs on board, you get enough sway with regulators, you can get away with it, which is a very sad thing. We'll see how this ends up. Yeah, we'll see. But this is not an organic market, people.
All right, let's go. Willie, I got a question in the live chat. How often are your charts updated on your website?
They usually update every day, but I've been pulling data off CoinMarketCap, which is a little bit sneaky because they don't have an API that I pull. So I'm really scraping their site, and they change things. And so some of the stuff that relies on their data is broken, but most of the stuff is every day. It's a daily stamp. A lot of it's on-chain data. Kudos to Coinmetrics. It's their data that I'm using. If you were to get access to that, that's a hedge fund product. It's very much a lot of thousands per month to get access to that data. So they've been kind enough to give me access to that, so I can share some of these indicators out to the world for free. So yeah, daily. A long answer to one word. So should I go on to the next thing, or we've got another question?
No, I mean, it's another probability question. I really want to go back to the last videos that we did, because I remember, all the interviews I've done with people over the summer, I kept asking the same 3 questions. What is the probability we fall below 7K? I mean, I was pretty convinced, and we did fall. I'm trying to remember what people said. Then I said, what is the probability we close the year above or below 10K? Obviously, we closed the year below. And my third question was, all-time high before the halving. So I'll ask similar questions, but now that it's a new year, I'll have different ones at the end, but in a similar fashion.
Cool. You gonna ask these later or what?
Yeah, I'll do it at the end. So
Okay,
go on with the
all right.
chart.
Okay, so the chart we're looking at is volume weighted average price. So if you look at the amount of volume, how much people bought at each price, these red these lines here shows you the average price that at any one point the market actually paid for their coins. And so in a way, it's kind of like realized price. But rather than you doing UXTO sets, we're using the time in which they bought based on UXTO blockchain, blockchain stuff. But then also we look at the price at which it was trading. And so what we're seeing here is essentially the VWAP from the market bottom. So if you had bought at the very bottom of the market, this is what from that starting point, this is what the where you would be sitting with that as an aggregate of them. Like if the market there was no one in existence to this point, and then the market started here, and you ignore everything that was past, this is where the VWAP price is. And so generally what we do is we start from zero, we move upwards, and then when the bear market happens, we're in loss below 1, right? And what I've drawn here is while we're in the bull phase of the market, what is the biggest retrace at that point? Like how far does the market get into a loss-making position? Obviously, all I'm doing is the ratio of the price to the red line, which is the VWAP, and this gives us the ratio. And the ratio, if you're at 1, that's parity. You're at neutral. When you're above 1, you're making profit. This is the maximum loss you're exposed to during the bull phase. Here, that dip there, it was always in profit thereafter, and now here so far. So where we've touched down in the latest 6.5K band is generally only 3 points of contact right now. There's a very young asset, but we are in the zone where we typically expect as far as a retrace.
Yeah,
it's
like
a little bit like super.
Oh no, do not get away from that chart. Oh, go back. Dude, this chart is scaring the shit out of me. It's telling me you're about to capitulate for a 50% loss.
Why? Tell me why.
That's what happened the prior 2 times. The same situation.
Like this?
Yeah.
There's a bear market, bro. We never got to the top. Have we got to here yet? We haven't got to here yet.
Well, how do you know that it wasn't the top? Well, again, why do we have to get that high up? I mean, what if that was the top, the 2019?
Okay. Fundamentally, you need to accept we're in a bull market. If you don't accept we're in a bull market, then all of this looks like crazy shit, right? It's like all these points are wrong, right? This is the bull market, and this is the bear market, right? And I should cut this line and then glue it into here, and then therefore we'll be down here, which does not make sense because it's the most extreme. It's one of the most. Wait a minute. This only works if I started this at the right point, which is the bottom of the bear. If you think that the bottom of the bear is $1,000 here, then we can ignore this chart.
Wait. But why is it so unlikely that the current bull phase didn't last only 8 months, and now, so that was a mini bull, and now we're in a mini bear? Like the prior bear markets lasted.
Not a mini bear. We're recovering from a short squeeze and a dump of plus tokens, which stole from here oh, like it lifted us up a little bit here, and that we're dumping a little bit down here. But we're not in a bear. No way are we in a bear.
All right, wait a minute. A 50% capitulation from right now still keeps the $3,000 low intact.
Yeah.
Right? You can still have your big drop off like in 2015 and in late 2018. You can still have that big drop off and still maintain the $3,000 low, make a slightly higher low the way we made a slightly lower high 6 months ago, and start a real bull phase.
I don't have the chart. Hey, David, have you got one of those regression charts there? It's like, have you guys seen the regression charts? Regression being the long-term band in which this sort of arc traces. We're actually at the bottom. Like if we go below the 6K mark, it breaks the regression curve. And to me, the regression curve is the fundamental investors coming into the market. It's not the traders, it's the fundamentals. And the fundamental investors is part of that long arc of 10 years of adoption curve, going from a handful of cypherpunks to now 1% of the world. If we drop to 3,000, it means that less people, the people getting out of Bitcoin, and we're breaking this, because if you look at every single fundamental technology of which Bitcoin is one, the last one was the internet. You know, you've got mobile phones, you've got radio, TV, television. They all follow a very predictable S-curve. And with Bitcoin, just because we've got a price market on this, is that as that S-curve comes in, it starts to make influence on this price. And you see that S-curve result in this arc like this. I mean, I cut this short. It starts from 2009 and it arcs like this. If you break the 6,000 mark, we break the arc, which means that, oh, the technology's dead, right? It means that no more people are coming in and adopting it at a rate of 2x per year, which has happened for the last 10 years. So the $3,000 mark is not, a trader might say, yeah, that support is in, but a fundamental analyst would say, no, your S-curve is broken here. And so I don't think the S-curve of Bitcoin is broken. I see more and more people coming in, and it hasn't stopped. Michael Rorks of Cambridge Center for, what was it, the Blockchain Research or Alternative Finance, he does the most intricate study of adoption rates. And he found that in bear markets, we get a 2x adoption in terms of investors coming in, and in bull markets, we're at a 4x. So if you break the 6,500, you're saying that that's broken, and I don't think that's possible.
All right, well, we're gonna find out soon, because if it happens, I expect it to happen before the halving, right? So we got 5 months to go, and we will see if we fall below 6,500, which I still give a 60% chance that we will.
I'm taking a lot of time here. I'm just gonna finish off. I've got a whole lot of chats, but 1, 2, 3, right? This is like, I've noticed these clusters of, by the way, this is volume profile. This is like how much, this is part of the price discovery mechanism. It's like how much of the volume was traded on chain by real investors, not wash traded on exchanges. You can trust this because it's on the blockchain. And usually there's 3 clumps. Here, here, and here, and they're different phases of the bull market. We did this in this is the cycle most people are familiar with. This was the accumulation cluster. This was the cluster that popped us out of the accumulation band. And this was the cluster that breaks all-time high, right? This was the all-time high. This cluster was the all-time high, and then we go up higher. And what's forming right now is a cluster of sufficient volume that looks like we're going to build and build onto it to get to 20,000, and then we're on to the next thing. That's on-chain volume.
That chart looks bullish. I'm not gonna give you a hard time on this one. This chart looks bullish. Other than maybe, but we did.
This is like bulls versus bears show.
your prior threes. Well, actually, no, that's not true either. The 2015 one, the 2013 consolidation of three did not break all-time high. So I guess that's still somewhat consistent with the history.
Yeah, I expect this sort of cluster, this bulb to continue to go up there. And then there'll be like this sort of neck where not a lot of price discovery because we're in uncharted territories. But it looks similar to past clusterings. But this is kind of, you know, it's just pattern matching. It doesn't have that much sway, but it looks good to me. David and Murad's MVRV ratio, which is a ratio of essentially this is when people are in loss and this is when people are in profit based on when they bought their coins. We're also in this band in which you'll see it. We pop out of this accumulation band.
Historically, we tend to retrace to it to realize price whenever we start the bull run. Now we overshot by a whole lot to 14K. And then we're pretty much retraced to slightly higher. Some, depending on the data service provider, realized price sits between 5.5K and 6.1 or 2K. We, as you can see in the ratio, which is using Coinmetrics Pro data, I think, we pretty much achieved retracement to the line, which means a return to the average, the cost basis of the market from an on-chain perspective after the initial push up. I think that a lot of the stuff that used to work before, like, let me give you an example, that 200-day moving average being very reliable to, you know, signal major global lows during bull markets, which got completely broken this time around. I think that's an example of how the Plus token impacted the market structure in terms of first overshooting to the upside and then overshooting to the downside. I think my assumption is that if that event, that, you know, gray swan wouldn't have happened last year, we wouldn't have had such an extreme deviation from general means or moving averages in general. I think we're about what would have been a natural price by current date, meaning that you would have had a 2x from the bottom, the 3K bottom last year, which was, you know, the 6K bottom we just registered last month, the 6.4K bottom. I think that's a better fair valuation in terms of how during bull markets Bitcoin naturally progresses. You know, the thing is that it was a complete gray swan that took the market way up and way down. So just now, I think we're meeting what, you know, like, let's say last year, remember, Tone, you were breaking out of 4K into 5K. I'm guessing most people were expecting 6K to be a very strong resistance, right? Because it was the bottom of that.
I expected 6.5 to be
very strong
resistance.
It was the bottom of the.
Yeah, so I was gonna say, I got out of my long position at 5.5. Like I was long from 3,000-4,000 lows. And I got out at 5.5. But 6.5 was as far as I was gonna give it. It went all the way to 14. All right, I'm sorry, go on.
Yeah, exactly. Just to give you like a technical example of pretty much what every trader in the industry was expecting, right? You know, months of consolidation below 6K and then rip again. If this was like a regular, normal behavior market, but it wasn't, clearly. So I think that as support now, which was pretty significant on a technical level, you know, overshooting that much and then bouncing on that level, which didn't act as a resistance the first time around, I think that was very significant. We also have the exhaustion coming from the selling from the plus token scam, a general exhaustion in sellers in this last accumulation period. We have a lot of limit buying on spot, especially in exchanges like Binance. Binance had a 20 to 30 bucks premium over Coinbase during the holidays. Most of that is related to the West being on vacation, but that's significant. You also see the East buying again in proportion to the West. We're seeing this is mostly order book, but we're seeing a lot of more accumulation in this last range than before. So
the China's selling right now. See these green bands? This is when they were buying. See this? I don't know if you can pick that up on the screen. That sort of purple hue. That's them selling. Don't mess with the Chinese there. They're loving it.
They're like
out of the
people make the assumption that Westerns are better investors and all that, especially long term. That may be the case. I don't know. In crypto, that's still in question. But for sure, just traders, just as traders, the Chinese seem to outmatch the West, at least for 2019, for sure.
They're better traders in the West, without a shadow of a doubt. In the aggregate, I think a lot of the fuckery comes from China, to be honest.
That's what I think. They actually have like good traders because they actually are able to manipulate and put a lot of the liquidity games into fucking up with Westerners. So that makes them the winners of the zero sum game. But I don't know. We'll see how it develops.
We're on a TD9 right now on the 1/7 day. This is a thing that I've started using is the 1/7 day candle, which is 206 minutes. TD9 right now. Works on a lot of indicators actually.
Interesting. 206 minutes.
Yeah, 206 minutes. I'm really liking that time frame. It's kind of the closest thing you'll get to 4 hours, which is my previous favorite candle. 240 minutes versus 206. It seems to work nice.
Wait, so why are you using 206 minutes?
Because we have the 1 day candle, we have the 1 week candle, and we have the 1/7 of a day candle, which also is like this. These are prime numbers as well, and it just works. I'm finding it works really well for a lot of.
It's not going to work anymore now that you told the whole world.
Well, it might be a self-fulfilling prophecy, but usually these things reinforce the more people that use it, to be honest.
I still like the 128-day moving average I picked up from you like 2 years ago.
Yeah, you got to tune it to the market, I reckon. But yeah, I pulled up that chart earlier to show you exactly what happened when we broke 6,000. This is the neobutane indicator, which is essentially the premium, the difference between spot markets and the derivatives, which is BitMEX. And so wherever BitMEX is cheaper than spot markets, it means that most people are shorting. And so you'll see this cluster in here. Obviously you would short because we're going to bounce off 6K, right? Obviously. But obviously you're going to make a lot of money by taking them out and buying them out. So that's exactly what happened. It slashed right through because this is a market of strategy, and if you got enough money, you put the price where you need to temporarily to squeeze everyone, and that's what happened here. Right,
well,
in this
the
zone,
funding rates, tend to be such a strong signal because they tell you two things, right? So assuming, let's say, an example, they're positive, right? Premium positive, funding rates positive. That means that open value comes into the equation as well. But for the most part, it tells you two things: that people are overly short, and or that there's a lot of buying on spot, right? Because the index spot is overpacing in terms of demand the derivatives. So that means there's actual buying. If you put open value or open interest into the equation, that means that, let's say, if you have open value, generally you will have, and let's say you have negative funding rates, you may get a short, you may get a short squeeze, because that overabundance of liquidity on the one side, to the short side, exhausts the other side, and price tends to return like a magnet to grab the liquidity of those and liquidate those overly zealous shorters. So pretty much depending on open value, you can assess whether each move is spot led or derivatives led. To give you an example, on the rise from 60, the last major bottom, which we made at 6.4K, that move was very much spot driven on, Coinbase and other spot exchanges.
Look at the bottom, by the way. Look how short everyone was.
Yeah,
everyone
exactly.
was neck short. It hasn't been that short in a long time, and that was
but
the bottom.
The interesting part about that is that the spot, you have a lot of shorters, but you had low open value, which means that most of the volume, or at least the demand on spot, was really outshining and trending up the market, which means it was not a short squeeze, an artificial short squeeze,
Yeah.
which is
Explain
mostly
open value, David.
open value. It's, well, most people are familiar with the open interest term, right? Is the quantity of contracts, in this case in crypto, is a contract equals $1 in derivative exchanges, right? So open interest is the amount of dollars or contracts being actively traded at any given time. Sorry. Open value is just that equivalent, but measured in BTC, or the Bitcoins behind those contracts as collateral. So since Bitcoin is so volatile, open interest tends to rise artificially, because the same levels that would give you a long squeeze or a short squeeze at 14K may look much higher because the price is higher, right? So the open interest is much higher because it requires less Bitcoin to have a higher outstanding contract quantity. So open value is a good mechanism to filter that out and just give very horizontal historical levels out of which you can gauge when speculative interest in exchanges is high or low. So to give you an example, right, the short squeeze we had from 73, the Xi candle, right, when the China FOMO came out.
You mean the late October rally?
Yeah, exactly. That one.
Right.
That one. Whenever you had that,
that took place. That took place like on our last day in Bali.
Yeah.
Right.
Look, this is the classic bear trap pump.
Yeah, exactly. That trap. Most people were short. Funding rates and premium was very negative, and open value was very, very high. You had like 105 or something like that, 105K Bitcoin just on BitMEX.
Yeah, open value is essentially how many positions traders are at. So if there's a lot and they're all going short, it's payday to take them out.
So if you take that, a lot of oversold conditions in the market, you take that, it's perfect condition for a short squeeze, and it pumped the price to 9K, and then distribution on spot started again, mostly from China, mostly from Plus Token, collapsing the price and keeping premium positive all the way through to new lows into 6K area, right? So that's what happened. So it's pretty much like the fuel. You have the fuel, which is open value, open interest, and then you just notice which one of the two is leading price in any given moment, depending on open value, of whether open value is high or low. If it's high, mostly derivatives will lead the momentum of the incoming trend or incoming move. If open value is low and you see a trend, that means that spot Coinbase, right? Coinbase, Bitstamp, all those exchanges are leading the price, which means that as we saw on the bottom from 6.4K, that was real buying. That was real accumulation on spot, not on derivatives.
Looking at this, you know, like we've got this tapering descending channel. Usually we break to the upside of this. So the question is that legit, or we bounce back down? So I would say what you want to see is if we go sideways here out of this channel, the next move is up, and that would validate the on-chain stuff.
Yeah, that's the thing. If looking back at the Wyckoff accumulation chart that Willy showed, the the chart by Nick Jaremchuk.
Nick, yeah.
You can actually see that the typical schematic 2 accumulation Wyckoff pattern is playing out exactly.
Yeah, by the way, he sent this to us like half a day ago. We actually did hit this price point, and then we're roughly around here now.
Yeah, so the equivalent of the schematic we would be right now is a sign of strength. Wyckofian people call it that, which is once you're kind of breaking out of the range, you want to see a healthy consolidation period at the top, right at the top of the range or slightly above it, and then break out completely, right? So if you start to see a lot of accumulation between, let's say, 76, where the CME gap is located at, and then let's say 79, 80, you can develop a nice little range there and confirm a sign of strength, which signals a lot of buyers to come in, led some moving averages to catch up to price as well, and price slightly penetrating moving averages like the 100-day moving average, which we are just hitting right now as resistance. And then yes, if spot keeps leading, funding rates and premium keep being on average negative, etc., etc., I think that's a good, literally, sign of strength, and the move up will continue.
Right now, we are expecting a pullback because you can see that majority is now long, so we think they're going to get screwed and they're going to come back down. Derivative markets are long over spot, and also China's selling. So this is going to come down in the next few hours. But I think the thing to really watch for is whether or not we slip out sideways in this Wyckoff SOS band. And if that's the case, then you don't need to believe my mumbo jumbo on-chain crap. You'll see it from technical indicators. But ultimately, this is the stuff that drives the market. It's the investment stuff. But if you need to see in the technicals, then what I'd expect is this to go sideways as the investor money comes in, and next phase is up. And then probably another 2 weeks, we'll see crypto Twitter turn bullish and the 5K targets will evaporate. That's my pick. My pick is crypto Twitter turns bullish in the next 2 weeks. They're always laggy. They always follow the price action. They never lead it. And
that being said, if the sign of strength doesn't appear and we engulf the recent pump, it's bad. It's bearish.
Yeah, it's a pretty compelling kind of daily candle we closed today. This is that was the daily that we just closed a few hours ago there, hugely engulfing. There we go. Let's pull it back. That's a huge engulfing candle. Most of the fund's been up most of the last 24 hours. I think I've only set 2 hours because we've been waiting to trade this candle, which came to fruition. And now I think we can take a bit of a break because I think it's going to go a bit sideways. I wanted to just close on it's been a lot. There's a lot of the Bitcoin stuff. I tweeted the difficulty ribbon in Litecoin, which measures essentially how much miners are adding to the hash rate, and we've just had a turnaround so that miners are now coming back in. So when you see this ribbon go downwards, it's miners shutting off their mining machines because presumably they're going bust or it's not worth their while. And so when this happens, the weak miners start to sell all their coins because they're on the breadline, mining being a cutthroat business. And so we've had, if you were to zoom out of this chart, which I don't have here, but this is the worst miner capitulation in Litecoin history, and we've just turned a corner. So I kind of expect a very strong rebound. And that happened a few weeks ago, and already the price is starting to follow it. And this was the last capitulation where we ran up there, and we're just coming into one of these classic technical patterns where we have a narrowing. What do you call this? What's the technical word for this, David?
Which part?
When you have a cone that's tightening.
The wedge? A wedge?
Yeah, it's descending wedge or something.
I was saying it, but I was muted. Yeah, it's a wedge.
Yeah, and this is like an expanding wedge that's being built as well, the opposite. And so I can see this doing very well. Keep an eye on Litecoin because often it leads Bitcoin's breakout for whatever reason. This is what it looks like in terms of Litecoin investor activity. And this is the line in the sand I'm drawing where.
Well, that's the thing. That's the thing, right? Like a lot of people say that, a lot of Bitcoin metricians are now saying that Litecoin price has no relation to its fundamentals, and the Litecoin USD pair is actually not only correlated but co-integrated with the BTC USD pair. So
yeah, they orbit each other. They orbit each other. I mean, I have this kind of theory that like the Litecoin halvening front runs the Bitcoin halvening, so its own macro cycle is time shifted earlier, and so that leads it to a behavior which leads Bitcoin in the macro movement. You won't see it in the hourly or the daily, but you will see it in the macro. And so I think that might be the reason. I'm not sure, but this is the investor activity within Litecoin, and this is sort of line in the sand. When we're below this line, it tends to be bearish. When we're above, we go bullish, and we're just about to cross into the bullish phase of Litecoin. And for me, it's like the canary in the coal mine. I would long Litecoin and get that profit in, and then once that started pumping, then your BTC longs can go in. But you know, this will be generating profits to lower your margin as you go into your Bitcoin. I think that's kind of nice, right? You do this, you get the profit from that, and then you enter your BTC long. And as this is climbing, that adds to your margin account or your collateral, while so protects you as you go into your BTC long. So just looking at this, I can't see a bearish picture on at all. I mean, I could see you'd be bearish if all you relied on was the technicals and trend continuation within technicals. But once you mix fundamentals into this picture, it's very hard pressed to be short right now. I would not be short. Obviously I'm not, but like, I feel like this is an opportunity of a career happening right now. We've been saying this within the fund because every move upwards now is getting diminished as Bitcoin's becoming more discovered and the bigger money's coming in and the movements are less volatile and exaggerated. And I feel like this is like kind of the last really interesting entry points, you know, entering at 7,000. Well, probably this top is in excess of 100 to 200. That's a good entry. Everyone's speechless or can't hear me.
Yeah, so I have to pull out because the market's still interesting right now. But
That's interesting. Let me have a look. What's going on?
yeah,
It's
the
kind of
market's
dumb.
yeah, stuff keeps happening, so I have to pull out for now.
Okay, man.
But pleasure being here as always, Stone and Willy. See you a little bit later. See you guys.
Hey,
Oh,
see
wait,
you,
David, before you go, I
What's
was
up?
actually, real quick, I was actually reviewing the probabilities that we did when we were all in Europe together when we did that stream. So my question was, what is the probability we fall to the vicinity of low 7,000s? Do you guys remember what you said?
I don't.
Yeah, because I've had a lot of hassle over it because I said no chance, right?
Willie, you were at 5%.
Yeah, I said next to no chance.
Right. And
I didn't know about plus token at that point. I have to say that. And also, I don't like this target thing because I'm not a price target guy. I'm a fundamental directionality guy. I'm going to be a little bit more careful.
Yeah. So all of you guys, like Murad was like at 10%, and I think you, David, were like in the vicinity of like 15%. So you guys did not have a high chance that Bitcoin would fall to the low 7,000s. We ended up falling below 7,000 several times, including 6,500. Just for me to like stick it at you guys for a minute there.
Yeah. No, that was a good call
number
on your behalf. Definitely. Yeah, like, the strength of the stuff that I do is around directionality and timing, when something's going to happen and which direction it's happening. I don't really get very good price targets. I don't get price targets at all. But yeah, I'm going to be more careful in future because I get a lot of hassle because I said there was no chance we'd drop, and we did. In terms of a macro, to me, that was kind of a macro bottom, even at those price ranges, because like structurally, it's right. The price might move, and you might not get the timing perfect, but we had a lot of dumping that was like not well. I didn't know about plus token fundamentally, but like it's a little bit like in the early days of 2012 when you can't. There's certain elements you can't predict if you don't know about them. That might be just one whale holding so many coins to dump. So yeah. Anyway.
Okay, guys, I have to go for now. Have a good one.
Okay.
Thanks for having me.
Get you. Must be like
David, your percentage was 15.
One.
Oh, okay.
He was David's the most conservative in our team, which is
I'm always the most conservative. Every single time you can bet I'm the most conservative ever.
Yeah. 1:30 a.m. in New York time.
It's all good. I'm good to go. You got a few more minutes?
See you guys.
Yeah. I don't sleep. Not with this kind of price action.
All right. I'll let you have a few more closing words, and then I'm gonna put you on the spot again with some percentages.
Oh, okay. I'm gonna let's grab that out of the way and see if I can pull up a let's pull up get out of the way, Mr. Zoom. Load chart layout. I wonder if we've got any of these. I'll just let's create a new one. New chart layout. I'm really interested in this kind of move contract right now. I'll see if it's on FTX move. Is that on there? Yeah, so Bitcoin move Q1. So this is a really interesting contract. I tweeted about it earlier, which is so this is the first quarter, which is now we're in the first quarter of 2020. Bitcoin moved 2020 contract, and this contract is essentially like you're going long or short how much the price is going to move between the start and the end of the first quarter. So currently it's priced at 1,850. So we think that the price is going to go $1,800 from the opening. The opening was 7,100 and some. So we're already we've kind of almost moved $800 and $900 out of this $1,800 in the first 6 days. And you know, some people trade options. I know you're an options trader, Tone, but I'm really liking this contract because it's super inefficient right now. And so I've been buying this at 1,700 because I was expecting this kind of breakout and a rip leading into the halvening front running. So not only did the Q1, but the Q2 and Q3 contracts might be interesting for anyone who wants to try going long on volatility any phase of this year, especially as we come into the front running of the halvening and thereafter. So I've been doing that. I think these contracts are inefficient. I won't say undervalued or overvalued because you've got to make your own opinion, but I think that there's a lot of efficiency to be had. So the fact that it's not very efficient, it's probably a lot of win to be had. And that this is only traded on FTX, and like there's a referral code. Just screen capture that. But that'll give you a bit of discount. I'm not affiliated with them, but if you wanted to sign up, then use that code and you get 5% off. I don't know what else. I'm open to questions. That's all I've got.
Go ahead, guys. Throw in some questions for Willy. I'm keeping an eye on the live chat. I'm gonna
here's the live chat.
Feel free to stop your screen share.
Okay, I'll stop the screen share. Stop share.
So throw in a couple of questions, guys. In the meantime, let me take the. I'm gonna put that here. Throw in some questions. I'm gonna take a look at those. I'm gonna jump on screen share real quick, only to promote Unconfiscatable that Willy is going to be a part of. Thanks for coming, Willy, and speaking. We're gonna have a great fundamental panel. Check that out. Willy, of course, is also going to the Financial Summit in the Dominican Republic because he really enjoyed the last one in Bali. And Willy threw his affiliate code up there. I don't have that one, so feel free to use his. Mine are on the affiliate page of tonebase.com if you guys want to support this YouTube channel. All right, I will take a look at your live chat in a second for a couple of questions. So Willy, let's throw a couple other percentages up here. I will go ahead and I actually took a look, wrote them down from what happened back in September. And in September, there were 3 questions. And the first question was the price of Bitcoin was approximately 8,500 or a little bit higher. The question was the probability of falling to the vicinity of 7,000, basically the probability of falling below 7,000. David was 15%, Murad was 10%, you were 5%. I'm sure you got a lot of crap for that. Don't worry about it. I'm still getting crap for $1,000 Bitcoin. It's all good.
You're not allowed to make mistakes, right? As a trader. This is a Peter Brandt thing. It's like all traders have got permission to be wrong. Because actually the reality of trading is that you can be successful being wrong 3/4 of the time as long as you're got good risk management.
I went short at $5,500 in April, and I made money on that trade. And because I got out pretty early and still made made a cup of coffee, and I didn't get wrecked. Okay, next question was the probability of closing the year above $10,000. which obviously did not happen. David was the most conservative at 60%. Murad went 80%, and you went 90%.
Yeah, no, that was a bad call. Very bad call.
And finally,
it surprised me how low it dumped. But again, like we weren't tracking what was happening with Plus Token.
And finally, this question is going to be reopened because the third question was the probability of a new all-time high before the halving, which last I checked was around May 13th. So the probability of being in the vicinity of all-time high, basically, I'll even say the probability of going above $15,000. David and Murad were at 60, you were at 75. So where are you now with probability of new all-time highs or vicinity of new all-time highs by the halving? You were at 75. Where are you at these days?
It's quite low. It's quite extremely low. I'd be going, it would have to be something unprecedented. I'm expecting the top region to be around the 16,000-ish. Just based on where we are right now, we've got a lot of catch up, and it's unlikely we'll get that amount of catch up. Generally, we're around 25 to 50% above the VWAP price. VWAP price is below 8,000 right now, I think. So, well, safely under 8,000. And it depends on how much that climbs. And so, like Murad's got a target of maybe 16, maybe 16. I don't think we'll get over an all-time high because that presents a bit of a hurdle in the amount of time we've got. And I'm not extreme on it. So, I don't know, I'll give it a 10%. A 10% chance,
right,
maybe
so new
less.
all-time high is 10% by the halving. What about breaking the last high, breaking 14,000 by the halving?
Oh, right. Okay. I give that a 50-50, maybe even a 60%. 50-50, call it 50-50. That's kind of like
the middle, give you 55.
That's the region I'm looking for. I'm looking between 12 and 16 in the halvening. 12 being very conservative.
Can I put you down for, I don't want to do 50-50. Can I put you down for 55%?
55%, sure.
All right, cool. All right, gotcha. All right, yeah, I'm more bearish than you on this one. Okay. I'm trying to think of new ones. You're the first one that I'm asking these questions in the new year.
Everyone just stop asking for price targets. I don't do price targets. I do models and directionality and timing.
Well, that's why I ask for, probabilities. Just don't say 99% on certain things. That usually ends very, very badly. That was one of the unfortunate things that Tyler Jenks said about Bitcoin going down to the $1,000 area. I do not agree with him on that at all. Okay, so now I got to come up with new ones.
Yeah, okay. Yeah.
Right. So this one, you might be a little bit high. What is the probability we close the year?
Oh, wait, Tone. When you we do these probabilities and statistics, there's probabilities and confidence levels, right?
Yeah.
And so when you name a probability, there's also a confidence level. And so when I give a probability out of my own volition without being asked, usually the confidence level is very high, and you get that on all my tweets. But when I'm asked a question, I'll give you a probability. It doesn't mean my confidence is high. And none of these price target stuff is a very high confidence. Just say that.
All right. Audience.
I wouldn't trade on it, guys.
Yeah. Well, all right. Well, I'm still going on. So now I got to come up with new ones for year 2020. Okay. So you should be high on this one. What is the probability we close the year above $10,000?
This year?
Well, yeah, close out 2020 above 10K.
Oh, Oh, gee, that's high 99%, isn't it?
Well,
maybe that's interesting. I've spoken to some very smart, notable people in this space who are good traders, and a few of them see this as a prolonged sort of sideways bearish market.
that's how I see it. That's how I see it.
You know, so in my view, I'd give it. I'd give it over 10,000. I'd give it an 80% with relatively high confidence. It's not like sketchy confidence. It's not part of the view that I'm holding. It'd have to be sort of a unexpected thing. You know, who knows? It's like maybe. Well, we've got the Mt. Gox tokens coming in. That might be sold onto the market. There could be a black swan, like something wrong with the code base. Most of the stuff in the economy probably would push it in a bullish sense. So, yeah, I'd stick with that. I think 80% with a high confidence.
Yeah, I think I should change that question to closing the year above all-time high. I think that's a better one than.
That's a different question. Yeah.
Yeah.
10,000 is nothing. Well, I think we'll clear 10,000 in Q1.
Right. What about closing the year at a new all-time high?
I'd say about. I'd say a good 70% upwards. Yeah, 70%.
Okay. And I got one more I just thought of. Closing the year with a Bitcoin dominance over 85%. It's at around 70%. It's at around 70% right now.
Don't really think in dominances. What was the target? 80%.
85.
85%. So it'd be up there. I give it less than 50% chance.
Less than 50?
Yeah, it's close to 50.
Push it down for 45?
40, 60. I don't think it's going to hit it, but there's a lot of good reasons why Bitcoin is going to run over shitcoins this year. The institutional money ain't going to be buying shitcoins. When you've got a $1 billion to deploy, you're not going to put it in some tiny little token.
All right. So are you over 50% on this or under?
I don't think we're going to hit. I don't think we'll close. We may hit it, but I don't think we'll close above it. So I'll give it a 40% chance.
40 close, 55 hit.
40% chance we won't hit the 85% dominance.
We won't or we will?
So I'm sorry. I do not think we'll hit it. And it's a 60-40%. 60% we won't hit 85%.
Okay. So 40% we will hit 85% dominance.
Yeah, 40%. Yeah.
Okay. We will hit or we will close the year above?
I think that at the end of the year close, we will be below 85% dominance with 60% probability.
Got it. Okay. So 40% we will be over it. All right. Those were my probability questions. Let's see what the audience has to say. I should come off screen share. I don't know why I'm still in screen share. All right. Your questions. Catch Willy at Unconfiscatable and Financial Summit, guys. He's coming to both. All right. Screen share stopped. Let's look at a few questions. I'm not going to keep you for too long. Any opinion on how the development of digital? Any thoughts on the development of a digital yuan affecting the crypto market, Willy?
I think that it's bullish, to be honest. I think that, generally, everything adds to the strength of Bitcoin is the pattern. Libra was bullish on Bitcoin. Digital cryptocurrency is bullish on Bitcoin. The reason before this is that it gives Bitcoin credibility when a nation state starts to borrow on Bitcoin's gears and cogs to try and create their own Frankenstein version of it. it gives it a lot of credibility. And right now, Bitcoin's such a small part of the world in terms of the economic powers that be. When you get something like a China, which was it 1.5 billion people, or a fair number of people, one of the strongest economies, decide to go all in on blockchain technology, it's saying that there's something in it with Bitcoin, where we're coming out of this time where Bitcoin used to be for the drug runners and the terrorists and the edgy cypherpunks and whatnot. And so when China goes into that, they're saying they see something here. And I think that's the message that the mainstream will see, because I think the mainstream still see Bitcoin as this sort of dirty drug money, terrorist supporting currency. I think that's more than 50% of the population that are uneducated in it. And I think when they see that, oh, wow, there's a country, one of the biggest economies, starting to use this type of technology, it's bullish. Because no one wants to buy it. They'll want to buy the real deal once they get enough education.
All right. Speaking of China, let's stick with that. Do you see the Chinese New Year having any effects on Bitcoin's price action?
Oh, okay. I haven't really looked into that. I would say that most of the Chinese traders would be in celebrations, and it would be very similar to a sort of summer month for American traders. At a guess, I would not know. Probably lightly traded, very volatile movement. I wouldn't say up or down. I'd just say up and down, or more chop.
Thank you, Jane, for that question. You got Willy thinking. That earns you a moderator branch. I got another one. What is your longer term target? I know you hate price targets, but we're talking 2 to 3 years out. Any thoughts on where Bitcoin might be at, say, the end of 2020, like somewhere in 2023? What are you thinking? I mean, I certainly expect a new all-time high at the latest, like 2023. And I am looking for the Bitcoin to go at least to 50K before the following halving. What are your thoughts 2 to 3 years out?
I think that this question, it's very obviously it's crystal ball gazing, but for me, it's like, it depends on how we play out. A lot of people say, this is the classic question, the classic questions we get is what target, and the targets are constantly changing depending on what the price action's doing right now. And so we can see.
And that's what people have to understand. Your view on as a trader, as an analyst, your opinion on the price is only as good as the last time you said it. And if you didn't hear the last time Willy mentioned the price, and you're going back to what he said a year and a half ago, it's really irrelevant. It's really what he said yesterday.
This is the analogy. You're playing a game of tennis, and this is what the markets is a game of tennis between traders and investors. And like, you're going to whack the ball, and you're asking someone, what is the direction, or what are you going to respond to the 3 balls ahead? And you might have an idea because like you're going to set up a play that forces the opponent into a particular way that which you might slam the next one, but it might change on you. And so like when we give these targets, it's at the current play right now, and that can change a lot over the next few steps. And so problem is most people hold us to whatever these targets are. And the answer to the question is that the longer this bull market runs, the higher the target is. You can go onto my site. I have a top target, and that's constantly running as an upper channel of where the market top can be. And you can just project how long the bull market is. And we don't know how long the bull market will be. timing games are for suckers, but that will give you a model around the top. I think the top, given the likely kind of cycles we've seen, on the lower bound is 100,000, maybe even, and I think 135 is a nice sort of sweet conservative upper bound for like, no, conservative upper target. But if you were to extend the bull market for longer, 250 is not out of the question, even and higher than that. But it all depends on how much the price swings in this bull market and how long it goes to. And so I would answer it with the top cap model inside my site. And the two variables is that when do we top and what is the price action inside that? And so how quickly we're rising within that phase. So yeah, 100 to 250, even 400 is not out of the question.
And I already have a question that's looking more forward than that. Where do you think the pullback is going to happen after that? But I don't think we're ready for that. Like, I don't really want to talk about the next bear market. I'm still waiting for the real bull market to come.
If my view is right, which is where bull market started and we're getting a compressed one, like, you know, the bull bear markets of Bitcoin, there's a gravitational lock to the 4-year halvening cycle, and you'll see that. So generally the safe answer is it's 4 years from the last top, give or take a year. That's your bounds of era. And the last top was December sort of 20th or so, it's 2017. So the next top is 2021 around the December. And so far my view is that we're compressed. So I could see us topping before then. Low confidence, because I want to see how the rest of this middle phase of the bull market goes. But we're talking around, I think it'll be that phase. Like if we were to go low risk, just middle of the road, then let's just call it end of 2021, start of 2022.
All right. I got a question specific to one of your charts. I don't really understand the question. I don't know if I want you to do screen share. Maybe we'll get back to it after a couple more questions. But someone's asking, can you explain the unlabeled part of the 1, 2, and 3 chart from the beginning between the first and second set of 1, 2, 3s? That's your...
that label part. Oh, okay. Right. Let me just pull that up a little and have a look. Do you want screen share or just verbally?
Yeah, go for it, I guess. But let's try to keep these. I mean, I have a million questions here. We'll try to keep these kind of quick.
Okay. I'll share it. All right.
Yeah, one of my admins asked it, so I kind of passing it along.
Oh, okay.
Yeah, so that would be
okay. So
I'm not really understanding the question. The unlabeled part between...
He's saying, or he or she is saying, what is this bit earlier, this early phase here?
No, I think it's the downtrend in between the first 3 and the first one.
Oh, okay, gotcha. All right. And so, all right. So, boom, boom, boom. All right. And then after this phase here, which is the reaccumulation, the smart money buying in, generally the price momentum's moving upwards, but the real investor activity, the real hard out volume is starting to drop. And this is like typically what you see in the mania phase of the market. And I would have said mania started here, right? I'll draw a vertical line to show you. This is the market most people are familiar with because it was the last one. And Let me grab that. This line, this vertical line here. Why can't I grab that?
I mean, for me, the mania phase was actually a little bit later than that. For me,
Yeah, I'm just having trouble with this. Here we go.
For me, the mania
So that's
phase.
mania for me. Mania is like we've had the reaccumulation, and that's the middle of, this is the fat middle part of the bull market, is the reaccumulation. And then when it starts to drop off, this is where the hoarding masses come in with not a lot of brains. And this is where the investor activity is starting to drop off. And this is the phase that you should start to look for the top. It's actually a really good question, because this is like top hunting, right? When you start to see this drop, you know that you're playing chicken with a freight train. Certainly it'll hit sooner or later. And so that was here, right? This was the last mania phase of that Mount Gox rush. This was actually Willy Bot that pumped it. And then interestingly, you see this last peak that happens. I don't know what that's about, but we've seen peaks right at that point of maximum top. So, but you look for that signature drop. And so, yeah, these fundamentals are really nice because it helps us time the top of the market with accuracy, whereas traditionally in other markets, trying to buy the bottom and sell the top is a game of gambling, and it's a sure way to get poor very quickly. But within the blockchain world, we've got these tools that, if utilized properly, we can get a lot closer to the top before the exit, or at least past the top and get really close before, like back here, some of our blockchain indicators said sell within this region up here, whereas traditionally you'd probably sell around the dead cat bounce there. Next question.
All right. Next question. What are your general thoughts on Plan B's stock to flow concept? I mean, I don't get what all the fuss is about. I honestly don't. I mean, we all know Bitcoin has a decelerating supply. So obviously, the whole point of Bitcoin, the way Satoshi designed it, is it's supposed to go up in value over time. But I'm just not sure that you can actually base short or even intermediate term trading based on the stock to flow model. But
so this chart in front of you is Bitcoin inflation, which is the blue line, right? Mm-hmm. Blue line is inflation rate per annum of Bitcoin. Turns out if you do the inverse, 1 over the inflation rate, this is the stock to flow ratio. Essentially, stock to flow ratio is inverse inflation. And what Plan B has done is done a lot of regression to find the best match to the price. And he's done a lot of work around making this predictive, so that we're going to expect around May a jump up here. And so stock to flow in its fundamental is the supply side equation for Bitcoin. Obviously, we have every 4 years at the halvening, and eventually the new supply on the market will be 0, which if you were to use stock to flow, I think you get to something close to resembling infinity. And so, like, I think that with stock to flow, it's actually useful in a way it's just tracking the current status of Bitcoin. I think that we're missing the demand side of the equation. And so what's happening right now is that stock to flow works because it's a very predictable supply side with the halvening. It's in the software. We know exactly what the supply will be, and it follows this blue line, and you inverse it, and that's the stock to flow. What the other side that's unstudied is not very well studied is the demand side. And the studies that I've done myself, and Michael Rorke's of the Cambridge Institute of Alternative Finance, is that the demand side just happens to be relatively consistent. The demand side is like a 2x per year baseline. And because that's constant, and we've got a relatively programmed exponential drop-off of the supply side, you get a stock to flow valuation that works. If we ever have anything that changes on the demand side, then I think the model will break. And it just so happens we're at the early phase, like 1% of the world owns Bitcoin. And generally, you have this really nice constant, what looks like a constant exponential climb. And it's 2x per year. It's kind of like the Moore's law of Bitcoin adoption. It's a 2x every 12 months. And that's been the case for the last 10 years. It's very constant, and therefore stock to flow works. And eventually we'll saturate. We'll saturate when we get beyond 50%, maybe at 70%, and that exponential climb will stop, and then it'll level off, and stock to flow will no longer continue, and it'll be whatever we find ourselves at. The demand side levels off. So I think it's useful right now in terms of predicting where the price will go, just because the other side of the equation, the demand side, is steady. But I don't think that it'll predict it. I think any model for valuing Bitcoin needs to have demand and supply put into it. And so this works now, and it might work for a number of years to come, but I don't think it's a full, it's not like the full universal equation of physics or anything that no one's discovered. It's just it's like Newtonian physics where it works in practicality for now.
All right, we got more. What are your thoughts on the Bitfinex situation with their ridiculous amount of long leverage to the upside? The ratio got out of control. The amount of longs was insane. It's starting to pull back a little bit. I can't explain it. I have no idea what the hell's going on over there. Have you guys looked into it?
I don't look at Bitfinex so much at all. They were smart traders, I'll tell you that. That the long was the right way to be. I prefer this Bitfinex Premium, which is this chart here, because the volume on BitMEX.
You mean BitMEX, not Bitfinex.
Yeah, BitMEX. This is the BitMEX long to short ratio equivalent. There's in Bitfinex, when people are long or short, and BitMEX you can only tell from the price deviating from the spot markets, and so this is people going short, this is people going long, and it's very accurate. And for a smaller exchange like Bitfinex, and it is small compared to the volume that BitMEX does, someone may know, but I think it is like 5-to-1 or 10-to-1 ratio. Whatever you see on Bitfinex, I don't think it's necessarily important. You want to look at the aggregate, or at least the biggest market. So often smaller markets, this is a little bit like a shitcoin, right? A little shitcoin can go any direction because of some random move. But every now and then, like, an exchange will start to lead and be very high signaling, but then it might shift to another exchange. And I like to just focus on, bread and butter, reliable indicators. Like BitMEX is very reliable because for now it's the biggest game in town, whereas Bitfinex is like a small little moon in orbit of BitMEX. So I don't want to look into it too deeply, really.
All right. No, I got you. Okay, I got a question from Leah. What are your thoughts on the Hong Kong situation with China, and what kind of effect?
Leah from Bali? Is that
yes.
Leah from Bali?
Yes, Leah from Bali, yes.
The Hong Kong situation, what, in terms of Bitcoin price, or? Yeah,
like the whole, companies moving out of Hong Kong. Do you think the instability in Hong Kong is helping the price of Bitcoin, or perhaps hurting it? General thoughts?
I don't know if it's had much impact. Hong Kong's, I think, a very important underrated city on the Bitcoin infrastructure scene. We've got a lot of a lot of organizations and exchanges operating out of there, whether it's officially or unofficially. There's a lot of workers in Hong Kong that are running these exchanges. They may be domiciled in other countries. And so in terms of the countries I've been to, Hong Kong's been the most professional of communities. Like most people may be Bitcoin meetups, and these guys are running ridiculously large companies wielding, 9 to 10 figures capital in their trades. So it's very impressive. I just don't know if the two have a lot in common, like one is really a political, storm that's been brewing for 170 years. And, I don't know. I'm probably the wrong person to ask. You probably need to ask someone like Leo, who's head of the Bitcoin Association in Hong Kong, who's really feet to the ground there with what's happening. And yeah.
All right, I got another price prediction question for you. I hit you with what are your thoughts for the next 2 to 3 years? What about the next 2 to 3 weeks? Do you think we still go higher over the next 2 to 3 weeks, or do you think we're going to be pulling back for the next 2 to 3 weeks?
I think that in the next 3 weeks, next week, I think we're going to chop around and retrace and bounce back and go sideways and break out of that that wedge, descending wedge. We're going to break out of that in a sideways movement. And then I think that we'll engage thrusters on the next move up. I'm not like 100% sure. I'm just looking at on-chain and investor, because when you talk about 2 to 3 weeks, that's well within the realms of the blockchain to see what's going to move next. And what I'm seeing on the blockchain is that a lot of the bearishness has been is out. It's all neutral, but it hasn't broken out to the upside. And I'm waiting for that to happen. But the momentum is that we'll break into the bullish within this time frame. So my best guess, unless it's it's a bounce off it and it goes back to bearish, but I'll know that ahead of time. But my best guess, if I continue the trend, is that we go sideways a bit here for the next 2 weeks, and then we break out to the high side, and we'll clear 8,000, and in the next 2 to 3 weeks, crypto Twitter will be no longer targeting 5,000, and now we'll be targeting 20,000 by the end of the month, or something stupid like that, which crypto Twitter tends to do. It just follows whatever trend the last thing has happened, and they exaggerate it.
All right, well, this one is not a question, more of a comment. Someone said, why in the hell does anyone listen to these guys? They don't even trade. I don't trade because I bring you content. Willy's actually been trading all day, and Willy, along with David and Murad, are part of Adaptive Capital Hedge Fund. Their job is to trade. Come on,
yeah,
people.
It's our professional role to trade. I've slept 2 hours because the market has been so heightened in the last day, and we were expecting it. We trade for the fun, we trade personally, and the position sizes are relatively large. So by all means, we are traders.
All right, we got, all right, I have a couple more questions, but try to answer them like, lightning round-ish. Do you think there'll be one more pump because of the halving, or do you think it's fully priced in?
I think I tweeted on this, I tweeted, Jacob Gamefield did this sort of recursive thing. The pricing is being priced in as much as it, hasn't been priced in, because the traders that are trading are black hinting the market with false information. So, it's sort of recursively like goes in a circle. And my translation of that is that that the public generally think that the market is efficient, efficient market hypothesis, and at every one point the market is valuing the price of the asset with all available information, whereas traders know that the price you see on the price chart is essentially a game of strategy between bulls and bears and fuckery. And so when it's low, it's not because the price is low, it's because someone pushed it that way to take someone out temporarily, and then they're going to swing it back the other way to take someone else out. And so is it priced in? Well, hell no. What the price you see right now is exactly what we need it strategically to happen for the best player to make the most money. So no. I think that like the market can effectively price an asset in the long term, but once you get into short term, well within the weeks, even in the months, it's well within the game of strategy we're talking about. If we're talking multi-year, then it's probably priced in. Yeah, so no, it's not priced in at all.
All right, good answer. Okay, some concerned people are asking, does it bother you or scare you that Satoshi may still have access to like about 1 million Bitcoin?
Well, it doesn't scare me. That's the honest answer. I don't wake up in the morning scared over that. I just think logically, if you're doing so much to hide your identity, which is smart because he'd probably be dead right now if he was a known entity, because I don't think it's legal to create your own currency, right? You'd be lifetime in jail or worse. I mean, this is like Ugly Old Goat could probably speak to this with his dabbling within gold and currency. And so he's smart enough, he or she is smart, or them, smart enough to keep it anonymous. Presumably you have 1 million coins. The moment you spend that, all eyes are on you. It's very hard to move those coins without being tracked. And I think that if you were truly Satoshi, you're also smart enough to mine a bunch of coins anonymously and set yourself up. And those coins are probably already in circulation. Like, what's the value of 1 million Bitcoins right now? Is it seven and a half billion?
Yeah, it'll be about what, 9 or 90 billion. I'm getting tired to do the math.
I think it's if you got 1 million coins, it's 7.5 billion. It's like, call it $8 billion. Okay.
Yeah,
now anyone, I can tell you without a shadow of doubt from enough friends I know who've been early whales that when they, even in their little world of only having tens of millions of dollars of crypto, and they don't know how to get it out into the banking system because the IRS is onto them, they're going to face jail time because they didn't declare taxes and that's hard enough with tens of millions. Now you've suddenly got $8 billion that you want to bring into visibility. It's going to be a very hard thing to do. So I don't think that's going to happen. I think more likely is that the Satoshi team, character or person, also mine a little bit that was to be spent. And
all right, I almost have to end it here. I have one, mostly because if this video goes more than 10 hours, the YouTube only shows you the last 2 hours of a video, and it takes them sometimes like days to get the first minutes in, and then people just nonstop complain to me what happened to the first 10 minutes of the video. So we have to end it here. But if you can give me a 30-second answer to your thoughts on quantum computers. I'm so tired of debunking this nonsense. But the next, scare FUD is going to be quantum computers are going to destroy Bitcoin. Do you think Bitcoin will still be around in 10 years?
Yeah,
And
okay, you're right. Okay, all right. So we're gonna get quantum computers. I think it's like, what is it, 2030 is it's always getting faster. I think 2035 is when they'll be able to break Bitcoin. So all right, you've got Bitcoin now, which is 2030, so it's a world reserve currency. Okay, at that point, if you take the current trajectory and it doesn't break, it's going to be bigger than the US dollars by 2030. That's just trend line without anything else. So you've got this currency that's worth this amount of money. Maybe it's 10 trillion, maybe it's 30 trillion, maybe it's more. Okay, and someone just figures out we have got the technology to do quantum computing to break the network. What do? Do you want to move to a quantum resistant network with new code, or do you want to stick with the old one and give the quantum computer hackers the money? I think at that point, we will reach a consensus and we will get a hard fork. Ultimately, is a social consensus.
all right. We might have to explore that maybe at the conference on the panel. We'll see. That question will definitely come up at Unconfiscatable. All right, guys. Willy, you want to cut your screen share? And we're going to call it a day.
All right, guys. Thanks, Tone.
All right. Hey, Willy, thanks for joining me. It was a good 2 hours. Guys, come check us out in Vegas or in Dominican Republic Financial Summit. Thank you, Willy. We'll try and get you on again. I might run into you. I'll be in New Zealand, and then we might run into each other again later in Southeast Asia.
I might fly out for a day. Yeah. I might fly out and see you for a day.
Yeah. We'll discuss. We'll figure it out. All right. Hey, guys, thank you so much for watching, and I will see you all on the next one. Bye, guys.